Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Jude Wilson, and he is the founder of Centrist Financial Strategies. Welcome, Jude.
Hey, thank you for having me, Gary.
Sure. So, Jude, tell us your backstory. How did you? I know you went to Florida State. After Florida
Please
State,
don't hold that against me.
After Florida State, what did you do?
Yeah, I worked in financial services and banking for many, many years, but my passion was always around investments, and I really wanted to be a financial planner. So it kind of led me in the direction of working for some major financial institutions like Morgan Stanley and Prudential. And what I found was most clients were being underserved. It was really about kind of a turnstile type of environment, just bring in as many clients as you can. And I really had a passion for teaching and helping people. So I said, you know what? I think I can do this better. And I broke out on my own.
Gotcha. So when did you start up Centrist Financial Strategies?
Yeah, so as I look back now, it's kind of a funny story, because as I look back now in 2008, I thought, you know what? I'm done with corporate America. I think I can service the client better. And it was right before the financial crisis. So I opened my business thinking everything was going to be wonderful. And then boom,
Right.
I could have made more money working at McDonald's that year.
Right.
And I thought I had made the biggest mistake of my life. I left a very stable job, stable income to become an entrepreneur. But what I found, Gary, was it was the best time to open a financial advisory business, because most people that I was coming in contact with, they couldn't get in contact with their financial advisor. Everybody was running for the hills, and people who were just selling product did not want to talk to their client because their investments had gone down 20, 30%.
Right.
So people really wanted an advisor, and that was the best time to open a business.
Yeah, I think, what you're saying, I say it a little bit differently, but it's, those people were transactional versus
Absolutely.
building relationships. And I think that that's always something that's important anytime that you're trying to select a professional or to be part of your team, is make sure you have somebody that wants to build the relationship, that wants something long term and not just something that's transactional. What is it that you try to do differently besides build the relationship? What else are you guys doing that's different than most other, people that are in, the financial arena?
I consider our firm a comprehensive financial planning firm. When you look at the most successful people throughout time, like the Rockefellers, they had what was called a family office, and they had all the professionals right there in one office that they can turn to and have the best minds working together. And I always wanted to create something like that, but for the millionaire next door, the guy that's worked 20, 30 years and has saved and worked hard and saved and now is ready to enjoy the fruits of their labor. So I constructed the firm to be like that, to really look at all pillars of financial planning: investments, estate planning, risk management, taxes, and have all of the necessary tools to help a client build a holistic plan. And if a client had other professionals that they were working with, someone like you who's a great CPA, be able to bring them in and work with them as opposed to either not knowing them and knowing what they're advising,
Right.
or working against them and trying to destroy the relationship. At the end of the day, it's about the client and bringing the best advice to them.
Yeah, I agree with that. I mean, I think it's, you have to build the right team to be able to do their plan. So I think that that's something that's, always really important. How have you, you said you started out in, 2008, wasn't a great time, in the market, but things recovered and we've done pretty well since then.
Yeah.
What have you seen during that time that has really changed in the way that I'm going to say retirement planning is approached now?
Yeah, I think traditionally, when we've looked at retirement planning, we've all been taught to save hard, to work hard and save as much as we can. And then one day we'll be able to retire because you got a pension, Social Security, and what you've saved. That's been the traditional thought. And most financial advisors would say, if you get to the end of the rainbow when you're getting ready to retire and you save this pot of money, if we can just take a small pinch off that pot of money and grow your pot more than we're pinching off, you'll never have to worry again about income. They call that in my world the capital distribution model, where you have $1 million, you're taking out 4%, the safe distribution percentage, and you never have to worry again. But that model just doesn't work anymore. I mean,
Right.
let's face it. We've had 2008 where the market went down to almost 40%. We've had COVID where the market went down almost 40%. So if you're using one pot of money and saying, look, I need 40,000 a year, I got $1 million. If I take off 4%, I'm fine. But if that market drops 40%, now your million is 600,000.
Right.
You got a serious decision to make. So the way retirement planning has changed is twofold. One, most people don't have a pension anymore.
Right.
And two, most people need a better strategy than hope and a prayer that I'm going to make more than what I'm taking out. And that's what we focus on is
Right.
giving them that safety and security to know they're going to get the income for life and they're going to grow their pot.
Right, right. I think I had an old business coach that always said, anytime somebody said, use the word hope in something, is hope's not a strategy.
Exactly.
And that's always stuck with me. Anytime somebody says, that when they're planning something, well, we hope that this is going to happen. It's like, okay, well, that's not a strategy. So,
Exactly.
I think it's
And
great.
the other thing that's up your alley is taxes have only gotten more complicated.
Yeah,
You look at the Tax Cut and Jobs Act, you look at the Secure Act, and gosh, there's thousands of pages in both of those things.
right.
And when you look at our federal government and the way that we're spending, I tell clients all the time, go to I think it's usdebtclock.org. The deficit is just growing by wild.
Right.
And so we believe that tax rates could possibly double in our lifetime.
Mhm.
And clients like yours and clients like mine, you know, they don't want to have to give more than they have to the federal government.
Oh, that's for sure. I think that leads me into you guys do a lot of planning for soon to be retirees and retirees, but then you guys also have some tax reduction strategies that you use. Can you talk a little bit about that?
That's just a perfect question. You know, when I worked for some of the big companies, we used to have a disclosure right at the bottom of most of our brochures that says, we do not provide tax advice. Please see your tax professional. And I truly believe a great tax professional should be part of the team.
Mhm.
But I also believe that if you're putting together a comprehensive financial plan and your planner's not talking about taxes, holy cow, that's a
Right.
big hole in the plan. And so when we talk to clients, we want to see that they're not losing money unknowingly and unnecessarily, because every dollar that goes out the window, whether it's through taxes or some other inefficiency, is a dollar you're using to increase your net worth, increase the potential income in retirement, or leave a legacy behind for your kids and grandkids. So looking at how we can reduce taxable liability today and also create tax-free money in the future is really important. Last thing I'll say on that, and you've heard this before, I'm sure. You're going to smile when you hear this. Have you ever heard a financial advisor say, don't put all your eggs in one basket. You need to be diversified, right?
Right. Yep.
I think we've all heard that. But very rarely do we talk about tax diversification.
Mhm.
And that should be part of the strategy, looking at how, because not all dollars are taxed the same, as you know very well. We need dollars that are going to be protected from taxes today, tax sheltered. We have dollars that we've already paid federal taxes on. And then we've got tax advantage dollars that we'll never pay taxes on. And the trick is like baking a cake. You got to have the right amount of ingredients in each one of those areas.
Yes, yes, I firmly agree with that, and I think that is something that lots of times the financial advisors don't talk about it, because I think it's always looked at. It's like, okay, well, I'm trying to build your portfolio now, and it's not necessarily, I'm not worried about it later on because I need to grow it now because I need to keep your business now.
Absolutely.
Type thing. And I think lots of times, people don't look at that. And I know when we help clients build tax plans, we're not just looking at today, but we're looking at what the end game is, and what's it going to be taxed at later on, so we can make sure that that whole piece really gets looked at. So lots of times, and I'm sure you've talked to many clients about this, is what their risk tolerance is and how you help them determine that, because I think lots of times people truly don't understand what risk is and what their risk tolerance is. How do you guys go about helping somebody determine what that is for them?
I tell you, risk management is one of the biggest pieces of the pie in a holistic financial plan. And most people think about it as just the risk I have in my portfolio. What we look at that and ask them various questions to see, how they could tolerate a downturn in the market. But we broaden that out to all of the risk. For example, Hulk Hogan's been in the news recently. I used to watch wrestling when I was a kid. Well, when Hulk's son was a teenager, he got into a car accident, and the kid he was racing against, I think he became either a quadriplegic because of that accident.
Mhm.
And Hulk Hogan had already retired. Well, the son's best friend sued Hulk Hogan and the family. And soon after that, it wasn't disclosed what the settlement
Right.
was, but Hulk had to come back to
Oh,
work.
yeah.
And so if you look, Hulk Hogan then in turn sued his financial institution because he said, you guys didn't give me the best advice on how to protect my assets. I built this big net worth, and now more than likely he had to pay part of that out in a settlement. So when we look at risk, we don't just look at the risk in the portfolio. We look at your overall risk, because I want, if something, God forbid, if a plaintiff attorney comes to you because you had one bad day, I want them to look at you and say, oh my God, this guy, he's going to be too difficult. Let's move on to the next, move on to the next case. So we try to make clients as bulletproof as possible and
Right.
bring to the attention to them the risk they do see and the risk they don't see.
Yeah, I think it's lots of times it's the blind spots that, that obviously they don't know. And if you're not really having that full-on discussion with them, Jude, then lots of times, you're not capturing it.
Yeah,
And I think that's, and I mean, you hear people say it all the time, I don't know what I don't know.
exactly.
And I think that's where it's our job, and I'm sure that you guys do that, is that's where it's our job to help them know what they don't know. Not that we're going to teach them everything,
Yeah.
but just let them know, help them find where their blind spots are, and show them that, hey, we have the team that can help fill in those blind spots for you.
Let me give you one quick small example. I see
Sure.
this all the time. So a lot of people have first and second marriages, and they've got blended families and kids from the first marriage, kids from the second marriage. And when clients come in, one of the first questions I ask them is, how are your accounts titled? Most people are not aware that if you title your account incorrectly, you could be disinheriting kids from a previous marriage. And that's just a simple thing that, I mean, as I tell you this, I can see you smile because
Oh, yeah.
you've come across
I've
this
seen it
yourself.
many times. Yep.
And if you're not a holistic advisor, you may just be passing by that and putting the client at risk when it takes less than 10 minutes to correct that?
Right. Yeah. I think another one, you're talking about the titling, when you have this type of thing, when a spouse passes away or something like that, because we had this last tax season that the spouse had passed away, and then now dad died, and the retirement account was less to mom. So they
Hmm.
never went in and changed the beneficiary
Yeah.
to someone else. So by default, it goes to the estate. Well, then
Hmm.
the estate, I mean, where we're talking, there was over $1 million in this IRA that he had. So
Yeah.
the estate had to pay the tax on that $1 million.
Yeah.
And the daughter who received it, because it was only child left, um, she had no idea and was
Yeah.
so upset when we came to them and told them, it's like, hey, here's the tax return. And it's just like, and just said to her, it's like, look, this is why it's so important that you have somebody and not try to do stuff on your own. So then if your father would have had somebody helping him when your mom passed away, 6 years ago, they would have sat with him and said, okay, hey, we need to update everything.
Yeah.
And th- there's a lot to it.
You and I are big sports fans, and so I'll give you a sports story that I know you can relate to. Wayne Huizenga used to own the Dolphins, used to own the Miami football stadium. He was a great success story, came from nothing and built up this tremendous wealth. A lot of the business owners we work with are the same way. They came from nothing, just hard workers. They built up a good business, but they had that mentality from the days where the business was struggling that I'm going to do it all myself. I'm going to bootstrap this. And sometimes they don't seek an advisor like yourself that's holistic and looking at everything. Well, even Wayne Huizenga, as rich as he was, never did any estate planning. So when he passed away, the taxes on his estate was so great that his heirs had to sell off the Dolphins, sell off the stadium just to pay their estate taxes. And
Yeah.
that's something that probably would have cost him maybe $10,000, $15,000 to seek the help of a great estate attorney, and the difference that made to his family and the generations beyond that. So our clients are not as rich as Wayne Huizenga, but the same
Yeah.
principles apply.
Oh, yeah, yeah. If mom and dad are leaving you the house, and the way that, or I shouldn't say they're leaving your house. An example I would say is that mom and dad put your name on the house. Well,
Right.
now they just gifted you, a third of the house, and you're not getting the stepped up in basis. If there wasn't a gift tax return, there's all kinds of stuff that can go wrong with that. That it makes it where basically, unless you have a lot of cash sitting on the sidelines, you're not going to have the money to pay the tax on it. So
Yeah.
then you're going to have to sell it to be able to do it. And that may not be what you want. And I've seen that with lots of times it ends up not being so much their primary residence, it ends up being a vacation home
Hmm.
that this
Hmm.
happens with. So,
Yeah.
it's definitely, I'm gonna say it's definitely that open communication. And I think that this is, and you keep talking about the holistic approach, the team and stuff like that. It's really getting that team together and letting that team talk. And Jude, I would put money on it. You're like me in the fact that if we're talking about a client, you're not billing the
Hmm.
client for it, and I'm not billing the client for it, because we're
Absolutely.
talking about a client and trying to make sure we do right by the client.
Absolutely. The analogy I like to use, because, like I said before, you and I are both good sports fans. If you've got a championship winning team, whether it's football, basketball, you're the owner of the team, you're going to go out and hire the best general manager. The best general manager is going to go out and hire the best coach. The coach is going to hire the best assistant coach for the different positions. And he's going to get the best advice from all of his assistant coaches to come up with the game plan.
Right.
And I think once you reach a certain level of wealth, you need that same mentality with your financial plan. we like to position ourselves as the general manager. But if we're not the general manager, we just want to be one of the coaches that can come and say, hey, general manager, have you thought about this?
Right.
This is what I've experienced from my years of working in finance. And so whether we're coordinating with someone like yourself, or whether we're the general manager, we want input. We want healthy debate, because at the end of the day, it's about protecting the client and making sure they have the resources that they want.
Right. I think the other thing that's important in this is that, the advice that we give to the client doesn't have to always take our recommendations and use them, but we're going to try to let them know. And I'm going to say the more important things, like making sure that the beneficiaries are updated on your policies and stuff like that. Yeah, we're going to be a little bit more adamant about that as compared to,
Right.
hey, you should sell some of this Apple stock.
Right.
There's, so I think, to me, there's the unequivocal, hey, we need to fix this. And there's the, hey, you may do better by doing this, are kind of two totally different things. And I think that that's where building a relationship with a professional is much different than having that transactional relationship with somebody.
I knew we were going to see eye to eye. When I learned about you and I learned about your philosophy and what you do, I was like, oh, this guy's a brother from another mother. We're
Right.
we're going to be able to talk about some good information today.
Yeah, definitely, definitely. Um, what do you see? I mean, there's a lot of turmoil going on in the world right now.
Right.
Where do you kind of see, things moving? And I don't mean, okay, hey, predict this for us or anything like that. But how do you see kind of your business and my business and estate attorneys and stuff? How do you see that evolving over the next 3 to 5 years?
Wow, that's such an excellent question. I like to think of myself as a prognosticator. I could not have predicted that Florida State would have one of the worst seasons ever,
Yeah.
but
Especially not after last season.
oh my God. But in my industry, in our industry, I have seen a lot of changes. And I do believe where we're going as an industry is that there are going to be certain clients who are always going to want to do it yourself.
Mhm.
And they want the lowest possible cost for doing something. And that's perfectly fine. Some of them are very knowledgeable and can handle it. There'll be a certain set of clients that want advice, but are unsatisfied with the person that they have because that person is a one-trick pony. They
Mhm.
like a carpenter, they've got a belt, but the only thing in their belt is a hammer, so everything looks like a nail.
Right.
And then there's going to be the client that says, uh, I know I deserve more and I want holistic. I want that team approach. Well, that one client that's disappointed with the one trick pony and that other client who says, I want more holistic advice, they're going to come looking for people like you and say, tell me what you have to help my entire situation. Because I don't want to go to Jimmy for this. I don't want to go to Bob for that. I don't want to go for Sue to this. I want a holistic approach. And either we're going to have to learn to work together, or we're going to have to create a one-stop shop within our firm.
Right, right. Yeah. I liked this is my personal belief, is that I like, again, and it doesn't need to be a physical team at all in the same office. It can certainly be virtual. And if anything that the pandemic has taught us is that we can do things virtually and still be able to service everybody.
Right.
Uh, but I like that, it's like, okay, you're the financial advisor. That's your specialty. My specialty is tax. We have the estate attorney that's doing the writing up of the estates and the trust, and an insurance broker who's handling, all of your, umbrella insurance and everything else, as compared to one person that's trying to do all of those jobs.
Agreed.
Because I see a lot of CPAs that also do financial planning, and I see them not doing one of those jobs well, and sometimes
Absolutely.
neither of them well. And then lots of times it's like, okay, well, which one are they going to gravitate to? And
Yeah.
lots of times it
Jack of
ends
all
up being
trades,
what,
master of
yeah,
none.
it really, they lots of times they gravitate to the one that's going to make them the most money at that point in time. So at that point, they're being self-serving, and I don't think that that's the way that we're supposed to be, in my
Yeah.
opinion.
I would agree with you. I
So
would add one more thing to that.
sure,
I think your approach is 100% valid. And I think, and I know from our discussion, y- taxes is your passion, helping business owners is your passion, and other people that have issues with tax. And you have knowledge in some of the other areas of finance. So when you see something that's obviously wrong, you can say, why is my 80-year-old client in Bitcoin?
yeah,
That doesn't make any sense to me.
right,
And you could call out that other advisor. I think with your approach, that's where we're going, is that you'll have someone who has an amazing specialty, but is knowledgeable enough to look at the complete picture and be able to point out problems that they see, or maybe opportunities, and say, let's bring your financial advisor in and talk to him about this. Or you should go back and talk to your CPA about, QCD and other strategies.
right.
Not that I'm going to carry the ball, but go to the expert and make sure you've discussed this. I think that's where we're going.
Yeah, yeah. I think that's the right direction for us all to go for sure. It's just it's a matter of um, I'm going to say in lots of ways the client getting out of the way, getting out of their own way, and letting us talk. Because lots of times they like keeping all of us in a silo, and
Exactly.
it's really that's not benefiting anybody. And I mean, to me, a prime example of that is if we have a joint client and I'm doing their tax return and I see that they have a $50,000 capital loss carry forward, to me, I need to be communicating that to you because you may have a position that has a significant gain, but you don't necessarily want to sell it because it's going to create a taxable event. And this way I'm
Yep.
telling you, hey, you can because we got the
Yep.
losses to offset it. And that really benefits the client a lot. And that's
Well,
where the clients, and again, I'm getting on my soapbox here. The clients need to let us talk and not worry about cost because I'm going to say 98% of the time, neither one of us are sending them a bill for us communicating and exchanging information.
1000%. And at the end of the day, if you have a good person who's not only in business, look, we're all capitalists, we're all in business to make money. But most of us, people like you and me, have the heart to be able to provide good advice and want to and care for the clients. It's more than just a business; it's our passion. So you got to have first and foremost that person that sees the big picture. I give you another example of what you were saying. I had a client who was dealing with a no load company, big company. I won't mention the name because I don't want to put
Yeah.
myself in jeopardy,
Right.
but
Right.
big no load mutual fund company. And he was 5 years from retirement, had millions in his IRA and wanted to do Roth conversions. So he called the no load company, said, I want to do some Roth conversions. They said, how much do you want to convert? He says, I'm thinking about converting about 400,000, maybe even up to 600,000 and doing it over several years. Fortunate, before he did that, he met us, we talked about it. And if he had pulled that trigger, the domino effect of what that would have caused him, not only in current taxation, but increasing the IRMA effect on his Medicare. Because as
Right.
you know, we look back
Oh,
two
yeah.
years, and just by looking at that and doing the analysis, we were able to protect him for saving thousands of dollars. But he believed he was doing the right thing. And he talked to his financial institution, but they didn't give him holistic advice.
Right.
So clients, it's in your best benefit to let your financial people talk to each other and get to know each other.
Oh, yeah. Yeah. I mean, again, that I'm not a big fan of the do it yourself. And that's a prime example of how if he didn't meet you guys and you guys weren't able to help him, it would have cost him thousands and thousands of dollars, not just that day with taxation, but ongoing. And then on top of it, did he have the cash on the sidelines to be able to do that, to pay the tax? And lots of times they don't when they're converting that amount of money. And then they got to take it out of their IRA to do that. And then that totally defeats the purpose of what you're trying to do.
Absolutely.
So it is very important to make sure that, you're talking to somebody that has done this time in and time out and not just once.
Absolutely. I
That's for
couldn't
sure.
agree more.
Jude, I know we could sit here and talk all day long about about all of this. What have I not asked you you wish I had?
Wow, that's a great question. I think had we had more time, I would want to discuss what I call financial termites, places where people are losing money unknowingly and unnecessarily. Because every dollar that goes out the door is a dollar that you can't help increase your net worth, create greater income for yourself, or leave a greater legacy. And one of the biggest things that I feel like Paul Revere, instead of saying the British are coming, I'm saying the taxes are coming, the taxes are coming. Because
Right.
in 2026, the Tax Cut and Jobs Act will expire, and only one of three things are going to happen. Either they'll vote it into law, we keep the current brackets, either they come up with new brackets and new taxation strategies, or what I believe more likely, they're going to yell at each other, call each other names, and nothing's going to happen.
Yeah.
So tax rates will revert back to where they were previously. And I'm telling people, it's time to be proactive. We got to be proactive right now.
Agree 100%. So, Jude, if people like what they hear and they want to talk to you, how can they reach out to you?
I'd invite people to go to my website. It's centristfs.com. We also have another website called thetaxbomb.com, kind of talking about what I was mentioning before about the potential for tax rates to go up. And then lastly, like you, but I'm not as good as you, I have a podcast called The Roth Guy.
Great. Hey, I really appreciate your time. Appreciate the conversation we've had today.
It's been a pleasure, and I hope to get you on the show and find out who's your football team. Hopefully, it's not University of Miami.
Yeah,
No offense to the UM fans out there.
Definitely. Thank you. Hey, this week my guest was Jude Wilson, and he's the founder of Centrist Financial Strategies, and I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.